Alright, so going over how I take my approach to the market, how I try to determine where price is going to go. And it's extremely simple. And it's, not using necessarily gold back. It's only based on highs and lows and whether or not a candle closes past it or if it doesn't, right? So here we have this huge bearish trend, right? We were going this bearish trend, and we have an example here. We have our body close before this high. We continued bearish, going down. And over here, we got this 4-hour low. We see that price holds up, closes before it, and closes extremely bullish afterwards, right? And inversing this fair value gap, showing that we are extremely bullish now, right? Here, on this low, because, right, this would be your target and this would be your next one. On this low, we close past. So our next target is this one here. And that's exactly what we do. We go to it, but we end up reversing. So now that we end up reversing and having this strong close and inversing that fair value gap, showing that we're bullish, what is our next target? This high here. This is all we're doing right here, right? So then we get another 4-hour candle close. So now our range is between here and here. So in between this range, you're looking for a bullish buy, bullish entry, targeting up to this high. And the way I want you to think about it is that you can look for a move. We're day traders and we're trading on prop firms. We don't need this huge move, right? So you can catch any kind of small move through this trend because we've closed past this high, so now I'm bullish. You could look for any kind of trade, and you can target this high here. And what I like to do, a lot of people like to target all the way up to the swing high, to like the point on here on the wicks, and you'll miss your profit. If I'm targeting a swing high or so, I guaranteed profit, if I know it's going to go to that high, is at the body. It's at the body close right there. And as we can see here on the 4-hour, we don't close past that high. We hesitate and we make a strong move down. So what do we get? Another bearish movement, right? And now we're getting consolidation. We're not getting, good entries to be bullish. I'm sure you do on the 4-hour, on the smaller time frames through here, you can get a bullish. But we indicate here that we closed underneath and then we got a strong movement down. You could have found a short through here. And if you look, we inverse another fair value gap. We close, and you can take any kind of short through there. I mean, there's 122 points worth of shorts that you could have taken after waiting for the confirmed move, after waiting for the candle to close below, after waiting for the strong close pass. You don't have to wait for the inverse because you may not always get an inverse, but there you do, right? If we go on the 1-hour, give a little smaller scale, right? Because I use the 1-hour and the 4-hour to really give me direction on where the market's going to go. And then I use my 15, 5-minute, and 1-minute, 3-minute to find my entries. And, 5-minute fair value gap or 15-minute fair value gap and stuff like that. So this video is on the bias. And if we look on the 1-hour, after that bearish kind of close here, this is an example of, where price is just, fishy, and it happens. Right here, you get price close past, but we reverse through. But what happens? We close past that high. So now what are we looking to target in this next run before this candle forms? We're looking to target this high. So you could have taken any kind of buy entry through there. And that is 50 some points worth of profit that you were able to get. You're not probably going to get all that 50 points, but you'll find some type of setup through there. And now that we've closed past that, we're targeting our next high, which is here. And then what do we get? We get price closing before it. Even though we have the fair value gap here, we get price closing. The body closes before this high. me get rid of some of these lines so we're not getting too confused here. So our range went from here to here. Now it's going from here to here. So we're looking for our entries, and you had to keep an eye on this. Fair value gap there, we would have wanted to fill that before taking any entries to go higher. But, you're not always going to know. It could very well just run up through here. You're not always going to know what's going to happen. That's why you got to be patient. You wait for your entries. But if you look there, we closed past this high, so now we're targeting this one. If you wanted to go for full profit, could easily hit it. But from here to here, from that high to this high, you got 46 some worth of points. And then, like I said, you get that close, and now we're reacting bearish. So I would not look to be bullish or look for a bullish entry until we decided to close past that. You got your 15-minute, you got your 1 hour fair value gap and imbalance that we're sitting in here. But to really confirm our move and so that you don't get manipulated, if we were to be bullish here, we would have wanted to see price close above that. But since we didn't, these imbalances become way less valid. This means that there's a higher chance that we will close past these and run past them because we didn't close above it. If we would have closed above, then we would have had a stronger chance of coming down here and acting true and running up, because this is not true price action. We created a higher low compared to here. So that price is going to move true. It's going to continue another trend down, whether it be to this low or all the way back down to this low. So I'm going to repeat that one more time. We have, fishy price action right here, right? We close past, but then we immediately verse up. So after that fishy, untrue price action, we're waiting, and what do we get? We get a candle close past here, right? We get a candle close past that high. You could have found some type of entry through here if you wanted to, after you saw how bullish we were moving and how bullish this was, to take an entry through there, some type of buy. And now that we had a close past this high, we closed past here. So now we're looking to target this high. What do we get? We get a nice run. We had that fair value gap, right? We got to still keep in mind the imbalances, right? This is just on direction. This is just where we're going. You see price is still going to these highs. Get a nice run through here. Got about 80 points there worth of profit that we could find. And then what do we get? At that high, the bodies close before. And then what do we get? We get bearish price action after. And so because we close on, it's not necessarily a higher time frame, but I would consider this your higher move or your bigger move, because yes, we're bullish here, but right now we're in this kind of accumulation right here. So we could see, now that we've closed and created a higher low, make these, as I was saying earlier, makes these imbalances less valid. So what I would want to see to really confirm my move and to really make sure I'm profitable on my trade, I would want us to close past this high, and if you wanted to be extra safe, close past that high. And this is, just the same approach, bearish. I'll make a bearish video here soon, in a second.